Now, the world is transitioning to clean energy, and so are many of us investors. Concern over climate change, rapidly declining costs, supporting subsidies, corporate commitments, and a better energy supply and demand management means that renewable energies are presenting a fantastic opportunities for customers and investors alike. Welcome back to another video. This is going to be another one in the series called Why I'm Buying, where I basically just explain why I own the stocks I own. And Nextera is one of my recent additions. I started buying shares early 2020 during the crash, so I picked up shares all the way down at 2020, I believe, and I plan to add on more in the future. This is a renewable energy company with a strong stock history. It also pays a great dividend, and there are many other reasons to own it, so let's get to it. Now, one thing almost all my investments have in common is that they are part of or leaders in a secular trend. So a larger shift happening in our society, like the transition to clean energy. This makes it so much easier for the company to make money and generates a lot of interest from investors. And you'd be hard pressed to find a stronger leader in the clean energy space than Nextera Energy. It's one of the largest, most well-diversified, best renowned and best performing renewable energy companies. And in 2019, it was ranked as the world's most admired company within the gas and utility sector. Not many to pick from there. And it's constantly ranked on the Fortune's top 25 companies changing the world for the better. So as far as a leader in clean energy, I think Nextera is pretty much it. And the world is also increasingly relying on renewable energy, with the current percentage of renewables being used is only sitting at about 15, but is projected to hit 30% by 2050. Now, that's 30 years from now with only 100% increase. And it might not sound like much, which is a good thing for Nextera because there's so much room to grow. And don't forget that there's still market share to be gained within the renewable energy sector. So a long runway to go for Nextera here. The cool thing about Nextera is that it's not only a registered electricity utility supplying the US electricity grid, but it's also an individual wind and solar farm developer. So you get the stability and dividend of a traditional utility and the growth of a growing energy developer. And I read in an article somewhere on Motley Fool that investing in Nextera is like buying two companies at the same time, sort of. You get the best of both worlds. Now, they have a max capacity of about 70,000 megawatts, which ranks them fourth globally behind Siemens, Vestas, and GE Energy. But they do, however, produce the most solar and wind of any company, period. And they boast 140 megawatts of battery storage, so this the same thing Tesla does. And their energy mix looks something like 63% wind, 17% solar, 11% nuclear, 6% natural gas, and only about 3% oil. And they've completely cut out coal. So I think the energy mix is looking very good, especially with wind being the most efficient source of energy in cost per kilowatt hour. So I like to see that percentage really high. And of course, you'd like to see a really low share for oil and coal. So really great on Nextera there. Now, their share price has had an unprecedented run for a utility, let alone an energy company. I mean, how often do you come across a graph like this? I mean, the stock has surged 365% in 10 years, more than doubling the S&P 500. And if you put the dividend on top of there, you're probably looking at another 20-30%, putting it close to 400% over 10 years or 40% globally. And if we compare Nextera's performance with that of other big utility companies in the US, well, there isn't much to compare really. The three other major utilities, so Duke Energy, Dominion Energy, and Enbridge, has on average appreciated 32% over the last 10 years, 375% short of Nextera. Now, past performance is no guarantee of future performance, but I'd rather bet on a performing company rather than these other slow-moving, boring dividend utilities. Now, its dividend is currently sitting at about 2.25%, slightly lagging the utility sector, or about $5.60 per share. And it's paid out quarterly, so 4 times a year. And the payout has been increased ever since they started paying one back in 2011, but the yield has floated between 2 or 3%, which is still pretty good considering the share price has surged 400%. And it's difficult for a company to keep the yield high when the share price is also going up, because a dividend is paid on a dollar per share basis, or dollar or cents, meaning when the stock price goes up, the yield should go down, but they've been able to keep it well above 2% and up until 3%. And the company's payout ratio is sitting at about 33% as of June 10, 2020, so they still got some room to grow there. Now, as far as the balance sheets, over the 4 years, they've seen healthy and decent growth, but keep in mind this is a utility company, so this growth is far better than most other competitors. So the revenue has gone from 17.4 to 19.2, pretty good growth there. Operating cash flow from 6.1 to 8.1 billion. EPS has gone from $2.48 to $7.70. Great efficiency there. And their dividends per share has gone from $1.20 to $4.44. Outside of this, the company has seen a lot of pressure on free cash flow, which has been going down quite significantly, and expenses have been rising due to the company's heavy investments in assets and maintaining its growth, which is quite unusual for a utility. I mean, most of Nextera Energy's competitors prioritize keeping growth steady, but instead increasing their dividend. But Nextera is trying to do both at the same time. And it has sort of paid off. Its assets, which are, its energy outputting sources, which is really important, has grown from 74.6 billion in 2014 to $120 billion in 2020. So their assets have been keeping up with the growth elsewhere. Now, their megawatt hour generation, so their max output, has seen some growth, albeit minuscule. The Nextera owned generation has gone from 186 million from 2014 to 193 in 2018. But the energy mix have been changed drastically, with oil and coal almost being phased out and wind and solar surging. Natural gas and nuclear have stayed quite stable during this period. This is good news for Nextera, since the cost of generating energy from renewable sources is dropping sharply and will soon overtake traditional energy sources like coal. And when we look at the levelized cost of energy, so we look at the cost of capital, operations, maintenance, fuel, and financing of utility, and the scale of the operation, the renewable energies, some of them like wind, are actually cheaper than coal now. And if you combine the reduction in price and the reduction in operational costs through the battery storage, Nextera can produce energy cheaper and more reliable and efficiency for customers. Now, because of all of this and the fact that they're a renewable energy company and they uphold their integrity, Nextera scores really high on ESG, or the Environment, Social and Governance score, which draws in a lot of money, billions of billions from investors every year. A lot of big financial investors are more or less forced to actually take ESG rating into account. So this is not just some fancy words on paper. It does really matter to you as an investor. And this means that Nextera and Tesla, for example, both holdings of mine, are in a secular trend within a secular trend. So they're getting a lot of money from the fact that they're in these big shifts happening in our society, but also the big shift to ESG investing. So this does really matter. So Nextera simply fits perfectly into my portfolio. It's my only energy stock and is one of 3 dividend stocks I have in my portfolio. You know, it pays a strong dividend, has a strong share price history. It's in a secular trend. It's a leader in its industry, scores high on ESG, and has a moat around it due to the high barrier to entry into the utility grid sector. So Nextera, is a no-brainer, and it really stands out as the most exciting energy company by far. So those are my reasons for buying Nextera. I can't wait to hear your thoughts. Please drop a comment below what you think of Nextera Energy or any other energy company. And as always, I hope I'll see you for my next video. See you.